There was a financial reset in 1944, Bretton Woods, another reset in 1971 when we went off the gold standard. I guess, and this is the way, when I talk to people regarding the current situation, my first question is the U.S. government bankrupt? Are they broke? And 95% of the people will say, well, of course they are, but it doesn't matter. And then my next question would be, who is the issuer of the world's reserve currency? It's the same entity. Mm-hmm. So you have a financial world that's running on top of a foundation of paper treasuries that are issued by a bankrupt entity. The absolute need for a financial reset is in place, and there would be no BRICS if that was not the case. Mm-hmm. So the world is, more than half the world now has begun the process of moving away from dollars, moving away from U.S. treasuries as the foundation for the world's financial system. There's your reset right there. The world is resetting away from the United States. But the paper in the West has been sold by financial institutions. They've naked shorted gold, they've naked shorted silver. That's suppressed the price. Mm-hmm. And the cash price is in China. Mm-hmm. Now, when those derivatives get blown up, you have the problem is you have balance sheets blowing up. You have big brokers, huge brokers, their balance sheets blowing up. And we get right back to where we were in 2008, where because it was a financial orgy, if your trading partner has been infected, people aren't going to trade with you because you're trading with an infected party. So confidence breaks, the chain breaks, and we will end up being a cash and carry market. When I say market, I'm not talking about just gold and silver. No. I think the derivatives in oil, in wheat, in grain, all the grains, the meats, all of those markets are going to end up being cash and carry markets because no one is going to trust the counterparty risk to the other side of the trade. You've got to be self-sufficient. You got to be able to feed yourself. You've got to live. I mean, if you don't live, then it doesn't matter how much gold you have or silver or stocks or whatever. So you got to live. And so self-sufficiency is first. And part of self-sufficiency, you've got to be able to protect your position. And if you're in a city, if you're in a metropolitan area, how do you protect your position? You can't. You need to be rural. You need to get away from population because those who don't have are going to look to you because you do have, and they're going to try to take it. You want to get your assets out of the system. You mentioned, obviously gold and silver. Well, gold and silver, the reason you go to gold and silver is because they are money. They're real money. And during bad times, what's the advice? Go to cash. Well, it used to be when you went to cash, it was backed by gold. That's no longer the case. Going to cash now is you're going to a commercial paper market that's debt, and debt defaults. So the reason you want gold and silver is you'll have capital after this thing goes down. You'll have a lot of capital. People that are sitting on gold and silver will be considered mini banks because there's so few people, less than 1% of the population own gold and silver. You don't want intermediaries between you and your money. I mean, if you're going to own stock, obviously, when I say obviously, this is my opinion, you want companies that make real things that are necessity. You want, basic type companies, agro companies, oil companies. You want companies that produce things that people have to use on a daily basis to survive. Now, if you're going to hold those stocks, you want to get those certificates. A year ago, it made the rounds, and it was a big, broad splash, the Great Taking. And I just want to say that the Great Taking is absolutely real. Everything that David Rogers Webb put out is footnoted. These laws are in place. The ink is dry. And when banks go under, when brokers go under, when insurance companies go under, the law says that they can take your deposits, your stocks, your cash values, and they can use that to save the company. Money in the bank, stocks, they're not yours. They're technically and legally owned by the bank or by the broker for your benefit. You are considered a subordinated creditor. And in the case of banks and brokers, you are the most subordinate creditor, meaning you're the lowest on the totem pole. You're going to get paid back last, which means you're going to lose your money first. So you want to ask your broker, you want to tell your broker, I want my certificate. And the way to do that is tell your broker to ship the securities to DRS, direct registration with the transfer agent. Once it's there, then you instruct the transfer agent to send you a stock certificate. That certificate is your proof of ownership. It's like a deed or a title. It can't be taken away from you. Now, can the company go bankrupt? Yeah, of course. Well, whatever stock you own, yeah, there's always a chance of them going bankrupt. But you don't want to own something that turns out to be a good investment, but you lost it because your broker went down and bailed you in. Bail-ins, and I mean, the FDIC has come right out and said that there's not going to be bailouts in the future. There's going to be bail-ins, which means they're going to take your money on account at banks.
When people ask me about the mess we're in today, I always start with one question. Is the U.S. government bankrupt? Most people laugh nervously and say, well, of course it is, but it doesn't matter. Let that sink in. The issuer of the world's reserve currency, the entity that backs the global financial system with paper treasuries, is itself insolvent. That's like building a skyscraper on quicksand and then wondering why the windows rattle when the wind blows. And that brings us back to resets. We've had them before. 1944, Bretton Woods, the world agreed to peg currencies to the dollar and the dollar to gold. That held until 1971, when Nixon slammed the gold window shut and told the world, our word is as good as gold. Spoiler alert, it wasn't. Since then, we've been running on a pure fiat experiment, and it's lasted longer than most expected, but it's showing the cracks now. Ask yourself this: what kind of foundation is it when the entire financial world rests on paper treasuries, but the issuer is broke? The need for another reset is beyond obvious. The BRICS wouldn't even exist if this wasn't true. More than half the world is already moving away from dollars and treasuries. That's your reset in real time. Not some theoretical conference in New Hampshire, but a wholesale shift eastward, where trade is being settled in local currencies, where China, Russia, India, Brazil, and others are quietly sidestepping the dollar system. Now let's layer on the metals. For decades, Western financial institutions have suppressed gold and silver prices with naked shorts. They created derivative mountains to keep prices in check, because a rising gold price is a vote of no confidence in paper. The paper price has been one thing, but the real cash price, the real demand, shows up in China, where the Shanghai Gold Exchange is pulling metal off the market. That spread between the paper and the physical is the biggest red flag out there. So what happens when those derivatives blow up? Balance sheets blow up. Big brokers, huge names on Wall Street, their books implode. We've seen this movie before in 2008. Back then it was subprime mortgages and CDS contracts. Today it's metals, energy, grain, and other derivatives that have metastasized into trillions. And here's the kicker. When your trading partner's infected, no one wants to trade with you. Counterparty risk destroys confidence. That's how the chain breaks. One link goes bad, the whole chain snaps. And when that happens, we go to a cash and carry market. I don't just mean gold and silver. I mean oil, wheat, corn, soybeans, cattle, everything. If you can't trust the paper, you demand the product in hand. No more promises. No more I owe you a barrel of oil. You want the barrel now. That's where this is heading. And that brings me to the most important point: self-sufficiency. Look, you can't eat gold. You can't drink silver. If you don't live, it doesn't matter how many Krugerrands you buried in the backyard. Step one is being able to feed yourself, shelter yourself, protect yourself. If you live in a big metro area, ask yourself honestly, how will you protect what you have when those who don't have come looking? You won't. The math doesn't work. If you're sitting on food and supplies in a city of millions, you might as well paint a target on your door. That's why I keep telling people, get rural, get out of the blast radius. And yes, you want your assets out of the system. Gold and silver are money, real money. In bad times, the advice was always, go to cash. But cash used to mean paper backed by gold. Today, cash is just commercial paper backed by nothing but debt and debt defaults. That's why you need real money. Gold and silver will still be capital when this thing burns down. In fact, the people holding it will be mini banks in their communities because less than 1% of the population owns any. Think about that. 1% or less will have the capital when the system resets. Those people will be the lenders of last resort. They'll be the ones who can make deals, buy land, trade for necessities. But only if they have it in hand. No intermediaries, not gold in an ETF, not silver in an unallocated account. If you don't hold it, you don't own it, period. Now, if you're going to hold stocks, and I'm not saying don't, then make sure they're companies that produce things people need. Forget the next social media app or whatever AI hype the Wall Street Journal is pushing. You want agriculture companies, oil companies, miners. The basics, food, energy, raw materials, things that don't go out of style when the lights flicker.
I would say go look in the mirror. You did it. I mean, maybe not him personally over just the last few years, but it's the system itself. And think about this. And one thing I pulled off from that is he's talking about the economy's growing at 1.2%. What's the growth rate of Treasury debt? What is the number? I'm guessing it grows at what, 7% plus per year?
Didn't they hit over $1 trillion in the most recent quarter?
Well, yeah, they're over $1 trillion on interest paid. And I think for the quarter, it was $1 trillion because the first quarter or the quarter prior to that, they borrowed way less than they had anticipated and then jammed it all in the first week or 2 weeks of the next quarter. But my point being, if you've got debt rising so much more rapidly than you do the economy, the real economy, to support the debt, to support the cash flow and thus the interest payments. It just seems to me that that's a mathematical equation. You can't do that. And we've known this for years that, any household that operated like the Treasury would be either bankrupt or in jail. So I think you need to ask yourself the question, if we're running a deficit of $2 trillion per year on an economy, what's the size of the economy now? Close to 30 trillion?
Yeah.
7% deficit per year. What would the economy do, or what would it have done if it wasn't for that additional spending of the $2 trillion that was borrowed by the Treasury? What would the economy have looked like over the last 10, 20, 30, up to, call it 60 years or 60 plus years? Because we've deficit spent every single year. I mean, back in the old days, when I say the old days, I'm talking about the 40s, 50s, 60s.
Wow.
It was, that's like ancient days for you, Chris.
You're around in the 40s, Bill? Goodness. Is that the 1840s or?
Deficits were supposed to be used during bad times to goose the economy. And then we were supposed to run a surplus during good times to save up for the hard times. Well, for 60 plus years, it's been nothing but deficit spending. And I would ask you, what would the economy look like had there not been any deficit spending?
So are you suggesting that borrowing $100 to make 50 is not the ideal structural arrangement?
Right.
Okay.
You're absolutely right, but that is the structural arrangement. Well, you're exactly right. If he's talking about cutting rates, but inflation could be a problem, I mean, it's what the market's already told them a year ago when market rates went higher and after they cut interest rates. I suspect that's going to happen again. I think we're going to have a weak bond market in this cutting cycle. And it's math. I mean, if I was a journalist asking questions, I mean, there's so many questions you could ask him. But the biggest one of all isn't inflation a result of monetary policy?
I don't think he believes that, or at least.
Inflation is a monetary event. Now, one thing he said was a one-time price increase. The only two things that could come to mind would be sudden stuff costs more because of tariffs, or is he talking about a reset? Is that what he's talking about? I don't really follow what he's talking about, a one-time, right? There is none.
In 1944, the world reset with Bretton Woods. In 1971, Nixon reset by killing the gold window. Both were announced events. Today, the reset is more like a slow bleed. The BRICS are dumping treasuries and building trade networks outside the dollar. China's importing record tonnage of gold while suppressing their official numbers. Russia, sanctioned to the teeth, still manages to ship oil and gas. And what are they accepting? Not dollars, rubles, yuan, even barter. The world is resetting away from the United States in real time. That's why the question, is the U.S. government bankrupt, matters. Because if the issuer of the world's reserve currency is broke, then every promise built on top of it is also broke. And yet financial markets act as if nothing is wrong. Stocks float near highs, bonds are safe, and everyone believes their brokerage statement. That's the con. It's a confidence game. The moment confidence breaks, the reset becomes visible. Now let's talk derivatives. The biggest casino in the world isn't Las Vegas. It's Wall Street, the City of London, and all the desks trading quadrillions. Yes, quadrillions in derivatives. Metals have been naked shorted for decades. Oil contracts are stacked on top of each other like Jenga blocks. Agricultural markets are full of promises of wheat, corn, soy, and cattle that don't exist yet. When one domino falls, and it will, balance sheets implode. We saw it in 2008 when Lehman went down. Nobody wanted to trade with anyone because counterparty risk was everywhere. Fast forward to now. The leverage is bigger, the debt pile's higher, and the counterparty's weaker. When the chain breaks, we revert to cash and carry, meaning if you want oil, you pay cash and you take the barrel. No more futures promise. If you want wheat, you hand over currency or gold and you get the grain. No paper promises. That will be a monumental shift because the modern system is built entirely on leverage and derivatives. Strip that away and you expose the real economy. Much smaller, much harsher, much more honest. And here's where survival comes in. Self-sufficiency. If you can't eat, drink, or protect yourself, it doesn't matter how many ounces of gold you buried. That's why I tell people, move rural if you can. In cities, when the lights go out and the shelves go bare, those who don't have will come after those who do. That's not paranoia. That's history. Look at Argentina during its collapses. Look at Venezuela. Look at New Orleans after Katrina. Desperation turns neighbors into looters, and you can't defend yourself in a concrete jungle of millions. Tweets tell the story better sometimes than lectures. One I saw recently: my financial advisor says I need a diversified portfolio. So I bought canned food, ammo, and silver. Sounds like a joke, but it's actually great advice. Now let's get into why gold and silver matter in this mess. People think of them as investments. Wrong. They're money. Always have been, always will be. In times of crisis, the advice used to be, go to cash. But that was back when cash was backed by gold. Now going to cash means holding debt notes backed by nothing but promises from bankrupt governments. Cash is no longer the safe haven. Gold and silver are. And here's the kicker: less than 1% of people own them. That means when the reset hits, those who do own them will be the only ones with capital. Think about what that means in a community. You'll effectively be a mini bank. You'll have the means to trade, to lend, to invest. Everyone else will be holding paper that evaporated. That's why I keep hammering. If you don't hold it, you don't own it. Silver especially is laughably undervalued. For centuries, the ratio of gold to silver was around 15-1. The Earth produces about 10 ounces of silver for every 1 ounce of gold. Today, the ratio is 85-1. That's not just undervaluation. That's insanity. Silver is used in solar panels, electric cars, missiles, medical devices. It's indispensable. Yet the paper price says it's dirt cheap. When the derivative market blows up, silver won't just play catch-up, it'll launch. Now let's talk about the great taking. Some of you may have heard the term. David Rogers Webb laid it out with documentation. The laws are in place. They don't need to be passed, they're already passed. When banks, brokers, and insurers fail, and they will, they won't be bailed out. They'll be bailed in. That means your money on deposit, your brokerage account, your insurance cash value will be seized to stabilize the institution. And legally they can do it because you don't own those assets. You are a subordinated creditor. Translation: you're last in line to be paid back, which really means you'll lose it all. That's why I tell people, get stock certificates, old-fashioned paper. If you own a company that makes real stuff, food, energy, metals, Then register those shares in your name, not in street name, at your broker. Use the direct registration system. Get the certificate mailed to you. That piece of paper is like the deed to your house or the title to your car. It proves ownership. Without it, your broker owns it for your benefit. And when they go under, your benefit won't mean much. Think this is tinfoil? It's not. The FDIC itself has said there won't be bailouts. There will be bail-ins. The ink is dry. And banks are already under stress. You don't need 50 of them to fail. One big one goes, and it's 2008 on steroids. Here's some humor to lighten it. CNBC. Your money is safe in the bank. Me. Define safe. Now, what does a reset look like practically? It means the dollar is dethroned as the world's reserve currency. It means treasuries are no longer the foundation of global finance. It means trade is settled in gold, yuan, rubles, or barter. It means confidence in Western paper evaporates. And it means those holding metals, food and land, suddenly hold the only assets that matter. History shows the pattern. In Weimar, Germany, those with gold bought entire city blocks for an ounce. In Argentina, those with dollars bought cars for pennies. In the US 1933 revaluation, those who kept gold had their wealth multiplied when FDR reset the price from $20 to $35 overnight. The lesson is simple. Those holding real money survive resets. Those holding paper don't. Let's not forget geopolitics. The BRICS know the score. That's why they're building a parallel system. They know the West is bankrupt. They know the dollar is a con. They're not going to say it outright. Not yet. Because why crash the system before they're ready? Instead, they're quietly hoarding, quietly trading outside the dollar, quietly building the next system. When the West finally keels over, they'll unveil it. And guess what will back it? Gold. You think China built the Shanghai Gold Exchange for fun? You think Russia's been stacking metal for kicks? They're preparing for the day the dollar fails, and they'll back their currencies with gold to restore confidence. Meanwhile, the West will be stuck holding paper. That's the reality. And let me be clear, I'm not saying it's the end of the world, but it is the end of this system. And when systems end, life gets bumpy. You can either be prepared or be surprised. I know which camp I want to be in. The US government is broke. The issuer of the world's reserve currency is insolvent. Derivative markets are ticking time bombs. BRICS are building an alternative. Confidence is fragile. The reset isn't coming. It's here. The only question is whether you'll be ready. Remember, in a reset, cash isn't king. Gold and silver are. Self-sufficiency is. Community is. And if you don't prepare, you'll end up part of the desperate crowd wondering what happened. So ask yourself, what side of this reset do you want to be on? The side holding paper promises? Or the side holding real money and real assets? That's the choice, and the clock is ticking.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.